Hello everyone, welcome back to another Lumley trading live stream. Again, we were inactive for the last few days. We did post it on the community tab, but now we are back. We were just doing quite a lot of testing over the last few days, so didn't really want to be live because I couldn't talk too much, obviously, if we were doing other things. Now, we did upload a video yesterday on all the earnings that were dropping. So again, that's this video here. So we will actually go through these just before the market opens on all the levels we gave pre-market or before the market closed yesterday for the earning names of Robinhood, Shopify, Unity, PayPal, and Qualcomm. So we'll go through all of those now and start to see how these started to play out. So we had Hood was one, Robinhood. So the release came in at an earnings per share of 3 cents. Obviously, I realized I got the wrong chart on the screen, so let me push this over. So yeah, earnings dropped. Massive sell-off on this. We came to basically retest this first deviation. Pre-market today, retesting it, but really holding in between our first deviation and that gap fill at 122. So if we're weak on the open, that would kind of be the target I would still expect us to come and hit, just to try and fill that gap that was created. It was quite a while back, I think. So that was created here on the 10th of July. So really just looking for that gap fill could be quite likely today. Around that same level as well, we do have the anchored VWAP. Again, this light anchored VWAP, that's from June 1st, so a quarterly anchored VWAP. So that's what we're looking at on Hood and how that's been moving. We then also have Shopify. So Shopify didn't really come near to any key levels. I think we did state that in the video. What's up, Apex Futures Trader? Good morning to you as well. Yeah, we did have Shopify, though, also drop their earnings. We did kind of say this in the video, quite unlikely that we push to a level because we were basically sitting at fair value. So it would be quite hard to push out really anywhere. So again, we do have targets set at 55.90 and 75.70, but so far off, I'm not really paying attention to Shopify as a trading opportunity. Unity. Earnings drop, we got this wingsaw action. Again, we've been seeing this quite a lot. These can be usually quite a good trading opportunity before the conference call, but released when you see the numbers come out. When you get the earnings per share and all of that, you tend to kind of get this quite often, this kind of wingsaw effect, where you go in one direction, then you fade it. That's trading opportunity. Again, that was kind of taken in line. We didn't move too much until the conference came in, and then conference was actually seemed quite well yesterday, and then coming into the open, we are selling off and we are becoming basically flat on the day. So if we do sell off into the open, we have a support at $40.30, which you can be paying attention to. And obviously, if we do go to the upside, we still do have that level at 43.35. I don't think that would be anywhere near as strong, though, as the support. So I'd be paying more attention to that $40.30. Another name that we had was Qualcomm, so ticker QCOM. Earnings dropped. So again, you can see you're still getting that same effect, even on a stock like this, where the earnings were relatively taken negatively and we are selling off. You still got that effect where the earnings were released literally as the close happened. You sold to the offside, pushed back up. So again, that opportunity is definitely there to get these fades. So that's one opportunity. But yeah, this release came out. We kind of did the initial move down to this first dev at 125. Eventually broke down, and we are continuing to the downside. And we are now at fair value. By the way, markets have just opened. Fair value at 118. PayPal alerts are going off, and that's the last one I think we have to cover. So PayPal, this one was actually quite a nice opportunity. Came out, again, we were slightly overbought. We were at this first dev as the earnings were being released, and all we did was sell off and basically came straight down to our target of fair value, near enough to the penny. And again, this was at around $66.60 is that fair value. Okay, I'll get rid of this so you can see all the main charts. Again, the earnings, we're still actually selling off PayPal quite harsh. We're down 10% on the day on PayPal. For buying opportunities, again, we're still going to have to wait quite a while because, again, these are the levels that we provided in the video are from these deviation charts. Now we are at fair value. We have to sell off to at least $60.25 for that first potential long opportunity. So it could be quite a while until we start actually getting some buy opportunities over on PayPal. We also had an alert go off on Pfizer, so ticker PFE. Not really too sure why, so let me see. Doesn't seem to be near any levels, so it might have just been, oh, we're cracking 52-week lows. That's why I had the alert out. So yeah, we're at $35.10. Again, this is a 52-week low on Pfizer. Our first deviation, so a potential long on this stock, isn't until $32. So really waiting for a bit more of a sell-off. I'll put in another alert over there. But I guess it's good to know we're down on those 52-week lows as of right now. Also seeing, and this is always quite key to know, I mean, you could get the same information from a heat map, but look at this. These are the biggest stocks up on the day from at least my watch list, which are mainly S&P companies. Barely any above that kind of 1% mark. You've got about 4 tickers. Go to the downside, you got a ton of names smash into the downside, meaning the earnings were taken pretty negatively last night. So that's quite key to note. Put that over there so I can see that. There we go. And also just want to say a big thanks for the support on the recent videos. We've kind of changed how we're doing them. Seems to be taken a lot more positively. So we'll continue to obviously do the videos like that. Let me grab that up so I can see the chat again. There we go. Let me just quickly grab it on my phone as well, because then it's actually a lot easier to see the chat. Sometimes it cuts off for some reason on the computer. There we go. Again, also the only... Oh, my Alexa's going off for some reason. Also quite key to note is we do have one big news event coming out today, and that's obviously what's in the title, the ISM Services PMI. So to quickly show you what we're looking at from this front, again, we can just throw on the investing.com. This is where I get it from, or Forex Factory or FX Factory. Both are pretty good at websites to grab the things from. So we do also have the Bank of England government Bailey speaking, or Governor Bailey speaking. Main things I'm paying attention to again though is really just going to be the ISM manufacturing or non-manufacturing, so meaning the services PMI. So again, this is releasing in 26 minutes. We're going to release at 10 a.m. Again, should be pretty much a fade unless we see this number. So again, we're forecasted at 53. Unless this comes in at 49.9, should most likely be quite a fade or a weak trend. Also as well, as always, at 10:30 on a Thursday, we do have the natural gas storage, which is something we do trade. But apart from that, everything else is already come out. Obviously, we did have the initial jobless claims, came out exactly in line. 227 forecast, 227 actual. Jobless came 4-week average. It was actually a bit lower. That's why it's actually in green, because that's positive for the market, obviously, or economy. And then tomorrow we do actually have big news. Tomorrow we do have the non-farms, I believe. Non-farms employment change to the NFP. That will be always a big thing. That is before the open, so probably won't be on stream for it, but that is normally quite a key thing to be paying attention to. There we go. Okay, I think we covered the main things. So we did do a video on Tupperware yesterday. Got a really nice short on this. We're down 6.5% today. Yesterday we closed down 60% anyway. Massive downside on there. Roku trade also going quite nice. We called this out, I think, on Tuesday in the Discord, which we were short bias on the Roku play, because again it was becoming extremely overbought. Our third deviations are here, as we always say. Very rare that a stock holds above this level, and if it does, it's short-lived, and that's what we've seen today. We sold it off to our third deviation, and then today we're gapping below. So we'll see. Looks like we're coming to retest it. We'll see if we can hold it. If we do break, I'm paying attention to anchored revap as a nice potential short. Neo as well, we did actually cop out of this yesterday. Again, this was in Discord because we weren't live. We did get short this because it came into a second deviation to this $14.50 on Friday. We ended up getting out yesterday because obviously we had that massive gap to the downside, and what we've been seeing on Neo is when it gaps direction, tends to kind of reverse it and give away most of its gains. So that's why I got out of there, because it did gap 5% to the downside. So got out in the first 5 minutes of the open and traded the upside. Did actually send, I think it's in the Discord actually, so I can probably grab it from there. I'll have a quick look so you can see the entries and exits we got on the stock. There we go. Actually looks a bit small for some reason. It's easier if you're not in the Discord, that's probably the easiest way to see it. But you can see Field, we got in at $90 a contract, we got out at 110. And again, we got out at 9:32 yesterday in the morning, obviously. Okay, well, we'll let some news play out, and we'll obviously grab things up if they're important, or go through things if they're important. Again, Roku coming into that level now, so be paying attention to that, seeing how we react at this kind of $91 level.
Unions. I've been a union member, twice union member, and I always felt that you could work together and everybody would do well. I never felt that we had to destroy the people that we were fighting. I was part of a J.P. Stevens, it was at one point a great textile company, stoppage, tried to block them, and they went under. And I've always regretted that I was part of that, because J.P. Stevens, we didn't want them to go under. We wanted them to, it was like Bond. Do you want me to? We just wanted them to talk. We didn't want them to die. And so I'm always very reluctant to see a union use such language that makes it feel like that it's zero sum. But I am pro-union, because the unions, in the way that Ronald Reagan was pro-union, it's like, you want people to do well, and you don't want people to have no health care. I mean, unions can be good. Yeah. But this is toxic. It's a very toxic situation.
Among the movers today, PayPal is pretty much in line on EPS and revenue. They do reiterate the guide. Final stages, Jim, of their CEO search.
I don't know. I mean, they mentioned that they have some losses. We don't want to hear that. We want to hear what Tim Cook has to say tonight. The buy now, pay later Apple, I think, is really killing everybody. And PayPal, the ratchet down in growth here is so severe that you're beginning to think it's a commodity. And now I hesitate to say that, because I think a lot of us got involved online spend with PayPal, but it feels very commoditized. And no, I'm not there. I can't find a bottom.
Clorox, is the move today about the beat, organic up 14, or is it more about just the tone of the tape right now?
I think that it's Procter-like, in that their costs are good. The brands turn out to be better than expected. There's a little twist where there's a division that was vitamins, which has been a bad division. And they kind of moved it over to another area, which I got to find out tonight when I speak to Linda Rendell. Are they getting out of that division? This is one of those that they shouldn't have bought, because they have unbelievable brands. And I'm very glad that they pulled this one out. People were starting to think, are they, has Clorox lost it? It's clearly not. Yeah. And they were one of these hangover. You got these companies that did so great during COVID, and then no one wanted to touch them. This is the beginning of the next leg of Clorox, and they generate a lot of cash. It'll be a very good. I'm looking forward to the interview.
That's a good one. That's
a very good interview.
Couple things in travel. Jefferies cut Southwest to hold, and Host is a miss. They trimmed the guide. They're getting a lot of outbound international travel without the corresponding inbound.
Yeah, that was interesting. And people are going to say, well, wait a second. American Express, did they say that? And they didn't. MasterCard, did they say that? And they didn't. Mixed picture travel. Obviously, Marriott was great. Fantastic interview. I like Bob Jordan very much, the CEO of Southwest Air. And the big issue has always been, was he given a bad hand? He's never going to say that. But we all know, I think the problem with Southwest is that everybody else is kind of caught up to Southwest. I don't think Southwest has uniquely gotten bad, but the other airlines you see, with the exception of JetBlue on that screen, like I think United is very good, American's good. I think Delta is like in the 80s when you used to buy Delta stock because it was a blue chip.
it was actually chip. Pleasant to travel.
Yeah, I was like, wow, Delta. I remember I bought 30 shares for my dad in Delta in 1983 at Goldman. And it was just one of those stocks of a company that's terrific. And Southwest is routinely missing their numbers. And maybe they have to rethink. They're missing their numbers, and they're going to have a very hard offsite. They need an offsite.
Yep. A little retreat. We mentioned the weakness in booking holdings pre-market. And, of course, Airbnb tonight, Jim, will give us a little more clarity on this.
I wish it hadn't run so much. Every time that Brian Chesky comes on, and he's been on multiple times, the stock gets hammered as people feel that he says, you know what, the high end's not doing well. And then you'll talk to him and you'll say, did you say that? And he'll say no. And there's always long knives for this company. And remember, the focus should be the app, and the focus should be it's still become like DoorDash, it's Airbnb, they've won. But the stock coming in hot like this up at 140, it's ripe to get hit. but I think that you once again gets hit, then buy. That's been the story. If you look at the stock since December, it's hit, buy, hit, buy.
As for Hood, gap profitability for the first time. Morgan Stanley reiterates equal weight. The MAU missed, though, Jim.
The MAU missed, and they're still doing that thing. A lot of their net interest income is where they had the good numbers. When I look at the breakdown of what people are doing, they're still playing options, playing crypto. I mean, they're not Warren Buffett. And when I saw the number first, everyone got very, very excited. But then when you look under the hood, it's still the same old guys. I mean, these are the guys who, when I look at Robinhood, I want to see it. I bet you they were buying a lot of Tupperware. They should buy Tupperware. I mean, the stuff. I mean, they get out of that mode. Maybe they were buying yellow. Like buying yellow. I mean, what are they going to tell you? Everyone thinks it's always going to be Hertz, where you have a bankruptcy and you actually make money. But I didn't like the profile of what people are doing at Robinhood, because Robinhood introduced this really interesting retirement package. They'll match, and no, I mean, they still resonate with stuff that's very zero-sum and loses people a lot of money.
Well, I remember when Vlad tried to make the pivot with you and sort of talk about long-term.
No, when Vlad tended, look, I think his heart's in the right place. The customers are the customers that are. They have to rethink what they're doing. They need to go buy and hold of really good companies, and it's not what they're doing.
Warner, we mentioned the strength of Barbie, and speaking of toys, Hasbro, this is the high for the year here. Despite a miss, revenue ahead. They did talk about inventory reduction, cost savings, selling a unit to Lionsgate.
Yeah, I thought that was good. And this guy, Chris Cox, ever since he's come in, I mean, he's done a terrific job. I was very skeptical. Brian Goldner was a guy who had been, the late Brian Goldner, had been consistent in trying to do what Inez Kreis, Inan Kreis, by the way, just understand, Inan he's Mattel. Now, he did not get, just got a few points from Warner on the movie. It was all in the ancillary. It's all in the back end. But Goldner was doing the same thing, and it looks like that's being a little bit undone by Cox. But what Cox is doing is terrific, and Kreis is doing an amazing job to tell. So we have two great CEOs in the toy business. That's unusual. Usually one's good and one's bad. This is a renaissance for toys right now, and it's good because both guys are both people who run the companies. I just like them. Very, very good people.
We mentioned, of course, Amazon tonight, and speaking of the cloud, Jim. CRM below the 50-day. I'm trying to think. This is going to be the first peak below.
Look, okay, so you go and you look, and 4 out of the last 5 times before Dreamforce, which is coming in September, you had to buy the stock. Mark Benioff has the CEO. He's been quiet, and a lot of people feel when he's been quiet, nothing's going on. They felt that way about Bill McDermott too, and ServiceNow did very well. I'm steadfast. Salesforce has probably been the longest holding, other than Apple, for my Travel Trust, and it's another one where the ROI when you bring them in is rather amazing. So yes, I see the breakdown. I see the breakdown in NVIDIA. NVIDIA's got to fill the gap and all these things, but these stocks are rolling over. But I think they're rolling over because they're either quiet, NVIDIA's in quiet period, or because, again, even since we started the show, it's become even, your mortgage just went, getting a mortgage again. Zillow, by the way, good numbers. Yeah. Just point that out. Zillow, good numbers.
A little energy here, Jim. Conoco and Oxy. Oxy boosting their production guide for the full year, although the Saudis say this voluntary cut may be extended for another month.
Right. I mean, Oxy was down a couple beforehand. It's doing okay. The metric that we're looking for this quarter is more with less. Were you able to drill? Were you able to have fewer rigs and get more oil? That's the metric for oil, and that's why Pioneer, PXD, has been the best performer, because what you're looking for is holding your costs down and producing more oil. And I got to study Conoco more, but I didn't see it. And Oxy, I didn't see it either. But that's the metric. So each quarter you have to look at what are why would you buy an oil stock? And right now you'd buy an oil stock because they're drilling with fewer rigs and making more money. That is what you should care about.
Pioneer, of course, yesterday saying we might have $80 to $100 crude into the new year.
They're very bullish. I was disappointed by Devon because Devon's run by Rick Moncrief, and he is just fantastic. They've not been able to do the numbers that I've wanted. I don't know why. I have to drill down with Rick because he's amazing. But yeah, Pioneer's been very bullish though. the stocks that if you the stocks to buy have been the pipelines. No one really wants to buy the pipelines, but they've been very consistent and very good.
Our data menu continues, so let's get some services PMI with Rick Santelli. Rick?
Yes, these are our final reads, Carl, which means we take the earlier month read, toss it, and replace it with this current read. 52.3 replaces 52.4, and 52.3 is still the lightest level going back, well, actually to February of this year. And if you look at that was services. If you look at the composite for S&P Global PMIs, it remained at 52, which, by the way, was also the weakest level since February. And the data stream does not stop here. We still have factory orders, durable goods, and ISM services PMIs yet to come at top of the hour. Squawk on the Street will return after a short break.
What I'll start doing as well is today, I think we've got a few big names, haven't we? We've got Amazon and Apple for sure. Let me quickly put up the stocks we have today reporting earnings. I think my phone's playing some sound. There we go. Yeah, so today, so obviously pre-market we had Moderna. Oh, that's probably where the alert went off. Oh no, we had Pfizer, so it's probably movement sympathy. Check quickly what's happening on Moderna.
Take a look at the markets on this Thursday. Bears still in control, although not to the degree of
Moderna's up 2.7% off earnings.
points. A lot still to come, though, this afternoon with Amazon, Apple, Airbnb, and a bunch of others. We'll get Stop Trading with Jim after a short break.
Oh, I'm quite liking the names actually today. So yeah, we got Amazon, we got Apple, Coinbase, Block, so ticker SQ, Airbnb, DraftKings, Cloudflare. I don't know what that stock is. But yeah, the main ones I'm paying attention to: Amazon, Coinbase, Block. Those should all be quite good names, and Wish should be quite nice. Oh, and for some reason I didn't include Airbnb and DraftKings. These are the, I mean, we've got quite a big few names then. 6 big ones I'll be paying attention today. Again, what we did yesterday, I'm going to do that more often because I think that was quite helpful. And let me know if you found it helpful, but I assumed it did because it did quite well. Was yesterday when we did the earnings. Again, we just threw all the ones having earnings in one video, so you can kind of just see them all in one instead of having to click video to video. So we're going to do that more often. Again, on the earnings, which is going to be Amazon, Apple, Coinbase, Block, Square, Airbnb, DraftKings, and Wish are the ones we're going to cover in that video. So that'll probably be at around 12 o'clock market time is when we'll look to release that for. Still need to record it, so we'll probably end the stream obviously around 10:30 or so, and then we'll cover that. Also, don't forget, in 8 minutes we do have the ISM PMI coming out. So again, we will be probably trading that. I trade that over on the futures, not stocks. But we will definitely be looking at trading that. Let me just quickly post that actually, because I never even put the stream in the Discord. There we go. There we go. I'm just seeing if any news has dropped either. So PayPal opens Thursday's session 10% lower on margin pressure. Robinhood shares fall 9.3% after CEO reports decline in monthly active users. Let me guys know as well if you guys are using Robinhood. Obviously, when I started off trading, used Robinhood probably as the main broker. Now I still got the app on my phone, hardly ever use it. I don't think I even really got any money in the account. They were quite good though, because they did bring out a debit card that you can use, which was quite handy. But right now I'm not living back in the States, so I kind of stopped using that card as well. But yeah, let me know, I guess, if especially if you're living in the States, if you're still using Robinhood. You also got Qualcomm shares sink 10% on the open, most since February 2021. So again, these are all the stocks we covered in yesterday's video and went through them as we started the stream today. What's that coming out? So we did have some news actually at 9:45. Let me have a quick look at what that was. I think that was the prelims, isn't it? Yeah, that was final services PMI. Final services PMI came out basically in line. But the big, I don't know what Jim Cramer is going on about, but he's going raging.
Cramer.
I have not seen it like this since I went 5 bid for 500,000 shares of Citigroup when I got hit in 1990. This is a different kind of market, and the Fed is asleep.
16 years ago.
The thing to look at there was the corner where the date was August 3rd, 2007. And what I was saying was these lockstep rate increases are killing us. And I had come out, and this is my friend Aaron Burnett, our friend Aaron Burnett, and we were going to talk about a stock. And I had just talked to someone who said, listen, my company's about to go under. A very prominent, very prominent mortgage company. And had spoken to another person who was another bank.
Oh, yeah, Jim Cramer, wild. Yeah. I don't even know what was happening back then. Yeah, I don't even know what was happening. Crazy guy. Just also looking through the upgrade, downgrades, and initiations. Upgrades, no big names. On the downgrades, you have Etsy. They've been downgraded to market perform from outperform. Price target moved down to 100 from 120. You also had Qualcomm downgraded by Deutsche Bank, downgraded from buy to hold, and price target from 130 to 120. You also had Roku downgraded, that was from Citi, downgrade from buy to neutral, and also price target from however, they have actually hiked their price target from $75 to 100, so much closer to current price. That seems to be the only big names on there. And then you have one stock initiated today, and that's IMMP for a target of $7. Seeing SQ volume is all over the place by Bradley. I think they got their earnings today, so it's probably why. I don't know if you're in here, so I'll just post that in chat. Again, we have in about 4 minutes, we got the ISM services dropping, so we'll be paying attention to that. Let me have a quick look at the SQ chart then. Don't know what happened at that 34. Big move on that 34-minute candle. How much are the options even pricing in for SQ? SQ pricing in about a 6-point move coming into earnings. Which would take us down to fair value if we pull to the downside. If we push to the upside, we're kind of just not near anything. We'd still be about 2-3 points off our next key level. Again, Roku on that open. Again, we were talking about that $90.90 third deviation level. Open up, we've retested it. That's held though, and we are selling off as of right now. Neo super strong on the open. I am still quite short bias on this stock, but again, that's why we came out of this position yesterday. Is because look how we're trading. So look, the 1 year chart quite normal, quite steady. It's this 6-month chart I'm not a fan of. So when we last looked at it, 13.20 was where that 6-month level is. That's gone up nearly $1 to 14.14, and that happened in just a few days. So that's the only thing I'm not a fan of on this stock, is it's just moving very quickly. So I want us to come into the third deviation on the 1 year, and then I can play it with a bit more time on the options. And so $18.50, what I'm paying attention to, if we can get there, then again I'm looking at it short bias, but it's going to be more of a waiting game as of right now. But that's definitely what I'm paying attention to. Again, we got the ISM coming out in about 2 minutes, so we'll let the news play out for a minute and then we'll get ready to trade this.
Tomato sauce, and there's no other place to get this stuff other than on Etsy.
You are a packaged good magnet.
I just love CPG. I do. I just do. And thank you, Aaron Burnett, for allowing me to do what I did that
Yes,
day.
that was good. We'll see you tonight, Jim. Mad Money, 6 p.m. Eastern Time. Still to come this morning, the CEO of Kellogg's on the company's latest quarter.
Good. There's a breakup coming, and it's really interesting.
And the state of the consumer. Markets down, yields still very stubborn. 10-year, 4.19. Don't go away.
Okay, cool. They're going on ad break. That's quite handy. So what we're looking at for this release, normally I'm trading the futures. So we got the ES chart over here, and we've got the NQ, so the Nasdaq futures over here. I normally look to play the ES, but we'll see how they move. Normally a fade as long as it comes out in line. And by in line, it doesn't have to be exactly 53.1, which is what they're expecting. All we need to see is this number stay above 50. As long as that's 50 or anything above, should be a fade. If this comes out at 49.9, then looking to more play direction. So we'll see how this comes out, or just not touch it at all. That's quite rare that you get a miss where it flips the direction, or flips the size, should I say. So we'll see how that is, and then obviously we got the nat gas at 10:30. Okay, we have 30 seconds to the release. Again, mainly paying attention to this Q's chart. You can pay a bit of attention to the bonds and the dollar, but I think main focus is going to be on the indices. So I'm going to change that to a 1 minute. I think this is already on a 1 minute, but I can't change it even if I wanted to. Oh yeah, there we go. Yeah, it is on a 1 minute. Cool. So we'll be ready for this. Again, these are the two main charts I'm paying attention to. There we go. Release come out. Waiting for that number. 52.3. So still above estimates. So again, normally a fade. Not getting a massive move off this release anyway. We come into VWAP, could be an alright short. Oh yeah, we're starting to get that move now. Getting a fade. Seeing a bit more of the move over on the ES compared to the Nasdaq. There we go, just hit out market. So then basically just a fade like we normally get on this release, as long as it comes out in line like we did there. Normally a fade. With these, again, I'm a bit more quick. The only one I tend to trade more to the penny is going to be the natural gas and the crude oil. The other ones, just waiting more for that bit of hesitation, which you kind of got here. Again, we didn't get that complete fade, and then it started to get bought up. It's where you got to be a bit more quick on these, a bit more reactive.
Three big movers are watching. Qualcomm, one of the biggest laggards on the S&P this morning. The chip maker under pressure on disappointing sales and guidance as they see a slower recovery ahead across end markets. Shares have underperformed on the year. We see they are now down over 10%. Clorox headed higher, sales topping estimates, so the company did warn of potential weakness in 2024 when it comes to the consumer. Those shares up 10%. And keep an eye on Expedia, slumping after gross bookings came in below expectations for the quarter, down about 13% right now.
Let's get some factory orders in ISM services. Rick Santelli's got it. Rick?
Yes, Carl, there's some surprises here. Factory orders for the month of June. Now, these aren't final. These are new reads on factory orders. Expected to be up 2.3%, and it is up 2.3%. That is the best going all the way back to June of 21. So that's a big number. In the rearview mirror, a positive revision from up 0.3 to up 0.4, which looks pretty paltry in hindsight. But now as you take out transportation, you get the picture. All of a sudden, that 2.3 turns into up 0.2%. And if we look at last month, a positive revision there, but still negative, from 0.5% minus to now minus 0.4%. Now, let's get into durable good orders. These are final reads, which means we toss out the mid-month read. 4.7 becomes 4.6. Still a very healthy read, and the best since mid-2020. If we look at X-Transportation, same dynamic. Transportation figured in just like factory orders. It's still a healthy up 0.5, so up 0.5%, replaces up 0.6. And if you look at capital orders, non-defense X-era, proxy for capital investment by business, up 0.1. It was up 0.2 on the mid-month read. And if we look at shipments, 0.1 is the number versus unchanged. Now, ISM Services Index for July, 53.1 expected, 52.7, just a little bit of a disappointment.
Also, just had some news from Robinhood, literally just an email you got from being a customer from them. See if it moves to stock, but they have just stated they will now begin passing through a 0.3, well, basically a 3 cent per option contract to pay the option regulatory fee. Not a massive amount, but we'll see if it moves to stock, considering they state they're commission free. And obviously they are still essentially commission free. You're not paying that to them, you're paying it to the option clearinghouse, but we'll see how it goes. I'll put it on the chart so we can see how it starts reacting off this news. Seeing actually a bit of spike in volume off that email. I imagine most people received it at the same time. I don't think this has been stated before.
For October, that's the number to pay attention to. Carl, back to you.
A lot of information in there, Rick. Thank you, Rick Santelli. Stocks are coming off the NASDAQ's worst day since February and the S&P's worst since April following that Fitch downgrade. That said, Berkshire's Warren Buffett today shrugging off some of the pessimism, noting he's not changing what he's doing at the moment, saying, quote, Berkshire bought $10 billion in U.S. Treasuries last Monday. We bought $10 billion in Treasuries this Monday. And the only question for next Monday is whether we will buy $10 billion in 3-month or 6-month T-bills. At the same time, Bill Ackman, of course, commenting on the long end and certainly these prices paid.
Also, just to note, I think it's today, so Trump is instructed to appear in court at 4 p.m. today. That'll be Eastern Standard Time. Again, this is in Washington. He has to go. Also, just to note as well, obviously this was, I think, 2 days ago now. Remember, the US did get a downgrade from the Fitch rating. Now, I'm hoping this could actually be taken as good news for the US. Hoping this will kind of get that act together. Again, they said, I think it was Pelosi came out and said it's not a big deal. But getting downgraded for, AAA down to an AA+, it's definitely not ideal, isn't it? It's not great confidence. Again, it still doesn't mean they're any more likely to default, really. But hopefully they start getting their act together, stop raising this debt ceiling or hitting the debt ceiling in the first place, would get rid of a lot of the negative annotations which you're seeing related to that downgrade. And then you also, US companies added more jobs in July than expected, highlighting the persistent strength of the labor market. That's private payrolls increased by 324,000 last month. That's all old news. So federal student loan bills return in October, but a growing borrowers say they simply can't or won't pay. To prepare for the retest of payments on October 1st, the Biden administration has initiated to a one-year leniency program to protect borrowers' credit. Amazon is launching the biggest overhaul of its grocery business since they acquired Whole Foods Market 6 years ago, revamping stores, testing new highly automated warehouses for the first time, and offering fresh food delivery to customers who aren't Prime subscribers. And you also have the Toyota Land Cruisers returning to the North American market. And I think that will be the key news that's been so far. So we'll let the news play out some more.
Don't be afraid of it. Just be prepared for it.
Yeah, so sort of acknowledging some of these fundamental shifts, but not seeing them as red flags, essentially.
Exactly. There's been a sea change in
I thought Jamie was going to answer you right there.
That's what I meant was.
Also, if you guys are enjoying so far, don't forget to drop a like and subscribe if you haven't already.
General undertow there of we do have a lot of Treasury issuance coming out. It could happen more on the longer end if there's liquidity for it. We know these things. The point about Fitch is maybe it focused attention on it, but the 10-year Japanese yield in the last week is up from like 0.45 to 0.7 or something like that. It went vertical. Now, that's obviously really low absolute level, but Fitch said nothing about Japan. Right? So in other words, it's a global phenomenon happening, in part for not bad reasons, which is the recession risk is getting taken out of the bond market in the U.S. But it does create a challenge for stocks at these levels.
Tupperware still down 9% on the day, but retesting its second deviation on the 6 month at 335. Neo's on those highs, and Roku holding that $91 level quite well, continuing to the downside.
The economy in econometric terms is, well, the regression of jobs to GDP. He talks about it more in business sense. And his sense right now is that the economy has avoided a downturn. He tries to explain why. And he thinks that if there is a recession, it will be one that's more mild. He talks about the idea that businesses have spent, among other things, the last year preparing for a recession. Kind of hard to have one when everybody is prepared, and suggests that it may need another shock in order to tip the economy into recession, unless the shock has already happened, which is the Fed raising rates. He does talk about different industries already having been in a mini recession up to this point. But overall, it's a kind of cautiously optimistic outlook that says because you're unlikely to have a lot of firings, and because businesses are maybe right-sized for relatively low demand, that we may already be in shape. Just real quickly, guys, on the ISM, it's one of those questions as to, well, what are you looking for here? Obviously, objectively...
Also, we did have the durable excluding defense. That came in at 6%, and durables excluding transport, 0.5%.
The ISM service sector may be just what you're after. Don't like to see the prices paid going up, the employment right around the 50 line. So it's one you want to watch. If it weakens further, well, then you're in trouble. But a little bit of weakening in line with the soft landing idea. Mike?
Yeah, Steve, it definitely seems like there are all these offsetting currents, as you cite, at this moment. Didn't get a chance yesterday to have you weigh in on this second straight super strong ADP private sector employment report going into an official jobs number. We know the market likes to sort of set that aside. It's not really determinative of the official number, but it seems like something did actually get the bond market's attention with that, like a just in case we get a hot number tomorrow.
Well, I don't know if this is helpful, Mike, but my mantra has always been, if you're not confused, you're not paying attention. And there's an awful lot of data out now that we didn't have before. ADP is different from how it used to be. ADP is not trying to forecast the jobs number, even the private sector part of the jobs number. It's just telling us what happened with its own universe of millions of workers who are on the payrolls that they process. And there's actually a piece by Barclays that came out yesterday, I don't know if you saw it, where they say, you know what? The data from ADP may be just as good or better than the BLS when it comes to know what's happening in the employment market. I've been looking at other high-frequency data. The home base is a little bit on the weak side. UKG a little bit sort of more in the middle. Mike, the BLS has had a very low response rate. They do come back and revise it later. So we're looking for, it was 200,000 tomorrow, right around there. But I think you have to take the idea that ADP is reporting strong job growth as a reality, because that's really what is on its books and the data that it has, Carl.
Yeah, even Challenger today, layoffs lowest since August. We'll pay attention to the number in the morning. Steve, thanks. Steve Leisman. Apple shares in the red just a touch. Investors awaiting earnings after the bell tonight. Company expected to notch its steepest drop in third quarter revenue since 2016. Baird's Will Power has an outperform rating, 204 target, and joins us now with more on what to expect. Will, it's great to have you. Our question for Cramer this morning was whether or not Qualcomm's comments about handsets color the view going in. What do you think?
Well, that's a good question, Carl. First, thanks for having me. Great to be back on the show. Look, I think generally speaking, there have been some negative data points out there. Qualcomm, is probably a piece of that, but I'd probably need a lot more hands, if I could count the negative supply chain data points over the year that didn't prove very accurate as it pertained to Apple. So look, we're still expecting solid numbers relative to expectations. Yes, revenue is going to be down year over year, but we're looking forward at this point to the September quarter and, of course, the numbers next year, which we think can still improve from here.
Yeah, I mean, Will, it seems like the big focus is less on what they report for this quarter, but the outlook for the coming quarters, particularly when it comes to this new iPhone cycle. And then this question about the long-term potential for the services business and the growth there. What are you looking for?
Well, I think, Julia, you nailed it. I think investors are going to be much more focused on trying to read the tea leaves as it pertains to the September quarter and the next iPhone cycle. Our expectation is we will see a seasonal uplift into the September print. And typically, this is a stock that does perform well in front of that. As you look at August and into September, if you look over a 10-year plus time horizon, it typically has at least some modest outperformance, relative to the market. And as you noted, this is a story that's very much about the expanding ecosystem, right? We've taken a long-term view on this for some time. Services has been a key pillar of that bullish thesis. We're still looking for solid growth there, both in this quarter and as we move forward.
Are you concerned about weakness in the Mac cycle? Do you think that'll start to pick up? And what are you seeing in terms of some of these other hardware pieces?
Well, fortunately, for Apple at this point, the Mac's become a much smaller, piece of the business. I think the worst is probably, behind us. But when all is said and done, this has been a remarkably resilient story, as it pertains to the broader macroeconomic climate and consumer spending. In iPhone, which of course is, the principal focus, has been particularly resilient despite some of the challenges in Mac and iPad that aren't fully behind them. But probably start to prove a little more resilient as we move forward.
Apple kind of continually proves itself as the stock for all environments. When people are worried about the fundamentals, it's got this safe haven status because of the balance sheet, because of the predictability. If we talk about services growth, I mean, even year over year, we're talking about 6%. That's what CPI did. So it's not as if it's really a current growth.
Hey, Ronald, I'm not in tune. Again, I will cover it today. A few people have been asking for us to cover it in the comments, so we will cover it. We'll have a video out later today on it. Not going to be something I hold. They got 2 price targets above $10 in the past week. Yeah, I don't pay attention to price targets. I got to say, most of them are bogus. When do you ever really see them play out that accurate? And on a stock like this, not something I like. And just to quickly cover it again, we'll have a full in-depth video on it later. But firstly, look how we are from a 6-month and 1-year perspective. Super strong downtrend. I don't care if it's a large cap or small cap. If I see this, I'm not going to be that long biased from a trading perspective anyway, because why would I want to be if the longer and the shorter term trends are downside? So that's firstly one thing to be covering. Secondly, very obvious down here, you've had the reverse stock splits. The only reason stocks have to do this is to be able to stay NASDAQ listed. And what's happened to this stock since they've done that? Just crumbled even more. You gave back, what's that, a massive amount actually on that reverse split day. Let me have a quick look. So it was announced what around here. You sold off 45% from there. Haven't recovered that. And again, that's just value gone just from them diluting their shareholders' value time and time again. So again, you sold that off. You're continuing down. To me, there is no sense, no fundamental value in a company like this when they dilute their shareholders' value just to stay listed on the Nasdaq. So to me, potential short squeeze if that's what you're looking for, a stock like that. But to actually trade and hold because there's value there, not something I can see myself. So if I trade it, I will be trading at short bias. If we were able to squeeze up to probably, say, $5, which would be that level, or the 575, then I'll be looking at it short bias. Hard to borrow, but does have options, so that's hard to be looking at touching it. But again, we'll have a full video on it later today. But not something I like, nothing I'll be holding overnight, nothing I'll be in long bias.
OpenAI or Google solution and others, I think that's a lot less likely. I don't think that's the game plan for them.
Yeah.
But without question, like others, they're bound to be internal efficiency opportunities for them.
Lots on the line. It's going to be fascinating to get the treasure trove of color and information tonight. Will, thanks. Will Power ahead of Apple earnings tonight. After the break, let's get a roadmap for the rest of the hour. A lot of big earnings movers today, including Robinhood and WBD.
Plus, the Amazon playbook ahead of results this afternoon with one analyst who calls it the best e-commerce play on the street.
And more on the consumer with the CEO of Kellogg on the heels of its latest results. We got a big show still ahead. Don't go away.
Like they stated as well, Warner Bros. Did have their earnings last night. Oh no, pre-market today. They are down off this news, only 2.5%. Played off the anchored view up quite nice, so tested that basically twice, sold off both times, continuing that downtrend. So that's quite key to know. Anyway, I do think we're going to end the stream here because I want to make the video. So again, we're going to cover Tune. We'll cover one other stock. Let me know if there's any stocks you want analysed real quick. If so, we'll have that as a video today. And then we're going to do an earnings video. So again, we'll be going over all the big names today. So that'll be Amazon, Apple, DraftKings. I can't even remember all the names you had. You had Wish, Airbnb. I think there was one or two other companies. So we'll cover all of those in one longer video instead of dividing them out, sending tons of notifications out for no reason. So we'll cover those, and then we'll have two individual analysis videos like normal. So again, if you want to stock analyze, quickly throw that in the comments, or just throw it in the comments of this stream and we'll get to it ASAP. Otherwise, we'll just cover another random stock, or not random, but we'll see what's moving. As we'll have a quick look at what's moving now. Normally I get the stock ideas from StockTwits. Then you can see what people are liking, the look of what is trending between people. So you have obviously PayPal, we covered that yesterday, so not too much point. Shopify and other earnings. You have AUPH, some pharmaceutical company, up 8.3%. Most active. You also have TTOO, so we may cover that because that's up 45% today as well. So we'll probably cover those two. Anyway, guys, hope you enjoyed the video or the stream. Hope to see you in the next one, and that's it. Peace.